Hi, welcome to this GAD webinar. I'm Heidi Stancliffe, Editor-in-Chief of GAD Asia and GAD World. We'll also be live tweeting this webinar, so you can join in the conversation using the hashtag GADWebinar. India is the world's fastest growing aviation market, and its new civil aviation policy is designed to accelerate growth even further, replacing the infamous 520 rule and boosting air connectivity in underserved regions. Today, I'm joined by Kata Cserep, Vice President and Managing Director of Airports at ICF International, who will be leading this webinar, to understand how the new rules will change the shape of the aviation market and create opportunities for new and current participants in India and beyond. Before I hand over to Kata, I'd like to remind you that we'll be holding an interactive Q&A after the presentation. If you have any questions during the presentation, you can send these to us using the Ask a Question button at the bottom of your screen. And now, over to you, Kata.
Thanks very much, Heidi. It's a pleasure to be moderating this webinar in a market that I have personally followed very closely for over 20 years. I'm really pleased that we have Amitabh from IATA and Sidharath from GMR to give us both the airline and the airport perspectives on this new policy which came into force in June of this year. The format of the webinar will be that Amitabh is going to make a brief presentation which will summarize some of the main features of the policy, and thereafter we will go to questions which I will pose to our panelists, and as Heidi mentioned, you, the participants, are welcome to pose through the webinar portal, so I will be passing those on to our speakers. So without any further ado, I will hand over to Amitabh to give us the overview of the new policy's features and set the scene for the discussion that will follow. Over to you.
Thank you, Kata, and good day, everybody. It's a great pleasure for me to join you on this webinar and to get to introduce a new civil aviation policy in India to you. I hope that many of you are going to be attending the GAD Asia seminar in Delhi next month, and I believe what certainly you will be hearing at the seminar would be a lot of references to the civil aviation policy. So hopefully this webinar actually gets to work you to give you a quick high-level overview of the policy. So let me get straight to it. Since the civil aviation policy is a wide-ranging one which covers many different themes, so to compress it within the next 10 to 15 minutes, what I've tried to do is give some structure to this presentation. What I will do is to start off with giving you a high-level background to the policy. We will address some of the priority areas of the policy, like that of regional connectivity. The impact on airlines, especially with regards to international connectivity, we'll cover that. We'll also talk about how airport development is addressed in the policy. Then the changes in the foreign direct investment rules in India, which have been introduced. And then to conclude it all, we will list out some of the other priority areas which have been covered in the policy. So moving on to the next slide, if I can get this, yeah. All right, so starting off, the government of India in June this year released what is the first of integrated civil aviation policy for the country. It's a very wide-ranging document with some 22 chapters and areas of coverage, which include many areas which are critical to commercial aviation, but also some areas which are rather specific in nature, like those relating to MROs or even skill development, for instance. So this need for a comprehensive civil aviation policy, it has been talked about for the last 10 to 15 years in the country. And given that we have an aviation market which has been growing at over 20% over the last 18 to 20 months, this need for a high-level policy document, I think, has been felt even more. So what the Ministry of Civil Aviation did was to initiate a process by circulating a draft policy, which was a rather cryptic few bullet points kind of a policy back in 2014. and they made revisions to it and recirculated that for stakeholder comments and feedback towards the end of 2015. That enabled the ministry to secure feedback from stakeholders, but also to initiate a round of consultations with other relevant government departments and ministries. So when all of that was done, and that took a few months, finally on the 15th of June this year, the cabinet in India cleared the new civil aviation policy, and that was released by the Minister for Civil Aviation on the 15th of June. So moving on, the stated priorities for the civil aviation policy, as you can well imagine, they are all very laudable goals, like the ones that you see on your screen, like that of taking flying to the masses by making it affordable and convenient, or of enhancing regional connectivity, and even that of enhancing the ease of doing business in India through deregulation and simplifying of procedures. And expanding the aviation market is actually the very central to the stated vision of the policy, which is to take domestic passengers to 500 million and international passengers to 200 million by 2027. And this figure and the year actually matches very closely with IATA's own forecasts about India, where we have forecasted that India will be the third largest aviation market by 2026, just behind China and the US. So this chart which you see is 2015 data for the GDP and the passenger growth for the BRIC nations and some of the other economies. And what it does show is that India's passenger growth in recent years has outperformed the rest by a wide margin. So from that perspective, development of this policy framework does not come a day too soon, we believe. Moving on, one of the priority areas of the civil aviation policy is that of enhancing regional connectivity in India. And after the scheme, the release of this particular policy, the government also released a scheme for regional connectivity, which is called RCS, Regional Connectivity Scheme, according to which there is a new regional connectivity fund which will be developed, but that will be funded through a new levy which is being imposed on domestic flights. The aim of the regional connectivity scheme is really to revive unserved or underserved airports in India and establish new routes which will connect these particular airports. The airline operators, according to the dynamics of this scheme, they would be able to bid for financial support under the scheme and operate these new routes. There's also a scheme, as has existed in some other infrastructure sectors in India. There's also the scheme for viability gap funding, or VGF, to meet if there is any gap between the cost of the airline operations and the expected revenues on these new regional routes. And also, I think what the government has done is that the price of travel or ticket for the passengers on these routes has also been capped at this level of 2,500 rupees, which is roughly $37 per hour or stage length of a flight. We believe that for the scheme to take off, though, there are a lot of different things which need to all come together and fall into place. It rests on various concessions which different stakeholders need to provide. So, for example, the state governments in India, they will need to lower the sales tax on jet fuel to 1% or less, besides providing for security and fire services and other utilities free of cost. The central government, through its Ministry of Finance, would have to come in and provide concessions in the form of reduced excise duty on fuel and even allow for some abatement of service tax rates which are applicable on tickets. Similarly, the landing and parking charges or the TNLC charges, they would need to be waived off by the airport operator at an RCS or a regional connectivity scheme airport. And there is also a new category of airlines, which is the scheduled commuter airlines, which this policy has created for operators of small aircraft, which can benefit from bidding for routes under the scheme. So that's about regional connectivity. For the airline sector, and especially with regard to international connectivity from India, this policy addresses that in two direct ways. One is through the so-called 520 rule, and the other is through a tweaking of the bilateral traffic rights. Talking about the 520 rule, this was a rule which is unique to India, and it had laid down the minimum thresholds which are required for Indian airlines to fly international routes. Basically, the airline needed to be at least 5 years old and also should have had a minimum fleet of 20 aircraft. This, as you can imagine, was quite arbitrary in the first place, and it became even more contentious in the past few years when two new airlines had been launched in the country. And there was this feeling that something needed to be done with this rule because it certainly was preventing Indian airlines from using the bilateral rights to the full. So in the civil aviation policy, instead of getting rid of this rule, the government has only chosen to tinker with it and has replaced it with a new 020 criteria. This now allows airlines to commence international operations, provided that they have 20 aircraft or 20% of their total capacity is deployed for domestic operations. So in effect, or in theory at least, all airlines, they can commence international operations provided that they deploy these 20 aircraft or 20% of total capacity for domestic operations. So that's about 520. And with regard to bilaterals, there was, when the policy was at a draft stage, there was this idea of auctioning of bilateral air traffic rights, which many of you would have heard of being discussed in media as well. Thankfully, that has been shelved in the final policy. On bilaterals, basically the government has adopted a stance of liberalizing of India's air service agreements in a stepwise manner. So for countries which are either in SAARC, which is South Asia, or those which are beyond a distance of 5,000 kilometers from Delhi, the government has committed to entering into open sky agreements on a reciprocal basis with these countries, with no limitation on flight or schedules, etc. So this, we believe, is a welcome development, which is in the general direction of, opening up of the sector, which can also help. It does help India's connectivity to the rest of the world through launch of new long-haul flights. Secondly, there is how the countries which are within the 5,000 kilometer distance from Delhi, how they have been addressed, is that for countries which are within this range of 5,000 kilometers, but where the designated carriers of India have not utilized 80% of their capacity entitlement, there is a committee headed by the Indian Cabinet Secretary who will constitute and recommend any air service agreements which need to be renegotiated to allot additional entitlements. And thirdly, for countries which are within this 5,000 kilometer distance, but where the designated airlines in India have already utilized 80% of their capacity entitlement, and additional capacity is required, the bilaterals will be renegotiated in the usual manner. So this really is how India has chosen to address international connectivity. The policy also covers the area of airport development. And you would be happy to know that it has ample language which encourages the development of new airports in the country by the private sector or even by state governments through the public-private partnership route. For the Indian public sector entity which is dealing with airport development, which is the Airports Authority of India, or AAI, there is a plan for it to modernize its airports and to upgrade the delivery of services. The Airports Authority has been encouraged to contract out its airports through O&M, or operation and management contracts. So this could certainly be an emerging opportunity for private operators, we believe. One of the key highlights of the policy, which I'm sure one of our co-panelists, Sidharath, would be extremely happy with, is that the policy also mandates hybrid till for tariff determination for all airports in India, whereby 30% of non-aero revenues will be used for determination of airport charges. For IATA, we believe this will, of course, lead to an expected increase in airport charges for passengers and airlines, but we do realize that it's a big positive for airport developers. And moving on, the government has also unveiled its rules for foreign investment in many sectors, but also that includes the airports and the airline sector in India. And again, the direction is really one that is towards liberalization and openness, with the investment rules having been made perhaps more liberal than many other parts of the world. To tell you about airlines, India now allows 100% foreign equity in the airline sector. This limit was earlier 49%. So with the new rules, 49% FDI will be allowed under an automatic approval process. However, the beyond 49% would require a process of government approval. There is also a separate treatment, though, which continues for foreign airlines, where foreign airlines can still own only up to 49%, as was allowed earlier. But theoretically, since the FDI limit is now 100%, that same foreign airline can, in fact, tie up with an international or an overseas non-airline entity like a sovereign fund or even an airport to, in theory, own the balance 51% equity as well. In the case of foreign investment limits for airports, once again, 100% FDI in airports is allowed. While this was allowed for greenfield airports only in the past, now even for brownfield airports, 100% FDI has been allowed under the policy. So there are many other areas amongst those 22 different chapters of the policy which have been addressed. And before I conclude, I thought I will at least list out some of those. For passenger facilitation, for example, there is an ample focus in the policy through development of performance norms for security, immigration, customs, and there is a focus on automation of processes like those of check-in, etc. The policy also covers helicopters and charter operations, and there are some relaxations which have been allowed in the policy. Ground handling, which had been a very contentious discipline for a long time, with lots of unresolved litigation between ground handling companies, airports, and airlines, that has certainly benefited from the policy, because the right to self-handle, which was previously denied to the airlines, the government has now allowed that as a part of this new policy. Again, in MROs, for example, there is exemption from customs duty for tools and kits, which has been brought in. And air cargo, there are initiatives which are underway and mentioned in the policy to reduce the dwell time through closer working between the customs authorities and the cargo terminal operators. So, Kata, maybe I'll just stop here. This was really the brief overview on the National Civil Aviation Policy. And
thank you.
I'll get back to you.
you condensed a lot of information, and it is indeed a very broad-ranging policy, which will have many points of interest for many different stakeholders. I'd like to go straight into to some questions, and to give you a chance to catch your breath, I'm going to turn to Sidharath from the airport perspective. And the two questions that I have for you, and I'll take them in turn, so I'll just give you the first one first, is in your view as an airport operator, how much of a boost, if any, do you expect this new policy to give to the traffic at Indian airports, and what do you see as the main drivers of that change?
Thank you, Kata. I think, firstly, a very good afternoon from India. And Amitabh, of course, has quite comprehensively covered, the entire breadth of the aviation policy. In terms of, what it will do for traffic, I think this is really actually a policy which has come at a very opportune time. India is at a cusp of change. There's a paradigm shift happening in the aviation sector, which actually we are very lucky to be witnessing. You are seeing very high growth coming in on the domestic side over the last 2 years, and this is actually further accelerating. We have seen, the growth rates of domestic traffic increasing to as high as 28 to 30% in the last 2 months, which is even higher than the 20-25% growth rates on the domestic side, which we were seeing for the last almost 1.5 to 2 years. And I think the reasons for this very high growth in the past has been the fact that there has been political stability, there has been increased economic activity in the country, and the middle class is actually now getting more confident of opening up their purses and spending on discretionary travel. And this is actually leading to a very big change in the growth of the domestic traffic in the aviation market. And this policy is expected to give a further boost to this very high growth rates, and I expect that these growth rates are going to accelerate further in the next few years and will sustain for the next few years. I think some of the key areas which I have been pointed out by Amitabh have been that, the regional connectivity. This is going to give a very big boost to air traffic, especially for, airports which are in major metros. You are going to see larger amounts of connectivity with the smaller cities, tier 2, tier 3 cities, which is going to bring a new class of customers and air travelers into the fray, who were earlier actually traveling more by train. I would see that they would now prefer to travel by air. Second is also the opening up of the bilaterals, which Amitabh also mentioned. I think this is also going to lead to greater growth of air traffic on the international front. Apart from that, there have been a number of areas of coverage, including, making things more competitive for the various players in the aviation space, including airlines, air cargo, ground handling, MROs, getting ease of doing business, so making things more competitive, and ultimately making air travel more affordable for the masses.
Great. Can I interject there, Sidharath? And on that point, because I think that is an important one, and one that Amitabh might have a position on from the airline side. Clearly, more affordable air travel. The other side of that coin is lower yields for airlines, and we've seen the cycles in recent years in terms of airline profitability and cash flow problems, which have led to sort of a boom and bust cycle, which is not unusual in the airline business, certainly. But Amitabh, what is your view in particular around things like the regional connectivity scheme, which is looking at capping fares, in theory very appealing for the growing middle class who's looking to fly potentially for the first time, but dilutionary for the carriers who are operating in this environment.
Kata, are you specifically checking about the capping of air ticket prices, or?
I mean, that's a specific aspect of the policy, but also generally speaking, the efforts to make air travel as cheap as possible, as affordable as possible. The airlines are the ones that get squeezed.
Sure. So I think what I would say is that the sector, the airline sector, is extremely competitive, not just the world over, but also more so in India, where it's also I think taken a toll on the airline financial health as well, as you would have noticed over the course of past many years. We do have an issue with regard to the fact that regional connectivity, the entire scheme is based on the back of development of a regional connectivity fund. And where would that fund come from? It would be through a levy which is imposed on domestic airlines, on the existing players, to be able to fund a new set of players who are perhaps not in existence at this point in time, but would be cross-subsidized by, levy, which contributes to the RCF to be able to fund that travel. So how this all falls back on the ground, with a lot of different things which are being addressed. The existing airlines, the incumbent airlines, were already expected to undertake what's called the route dispersal guidelines. So depending on how much are you flying between metro routes, you're supposed to deploy X percentage of that capacity on non-metro routes as well. So already there was a lot of growth in connecting of regional centers, which was happening on the back of RDGs. But that stipulation, RDGs have been made even more cumbersome for the incumbent airlines. And on top of that, there is an addition of the levy, which will, kind of go to build up the regional connectivity. So it's a little complicated, and it's a little early in the day, perhaps, to see how does it all, kind of fall back on the ground and provide the stability from where we can see, how does it affect airline economics, airline financial health, and all of the others. I'm not sure if it's a great answer, but I think it's really early days in terms of seeing this one through.
Can I just make a point here? See, firstly, I think when they talk about capping, it is not on capping yield for the airline. Ultimately, this is the ticket price that has to be offered for a passenger who's operating under the regional connectivity scheme. The rest of the money is going to come from the regional connectivity fund, which an airline has to bid for. So effectively, their yield is going to be higher than the cap tariff. And
thank you for clarifying that, Sidharath.
And secondly, I think what they are also talking about is a number of initiatives on making affordability for airlines, which includes low fuel cost, free land for building airports, low-cost airports to be built by airport authority, a very low service tax rate on 10% of the ticket price, free security and fire, and self-handling. So these are all issues which are going to improve the profitability of an airline.
Great. Thank you. Thank you for adding those clarifications. And just for those on the line, if anybody is sort of puzzled by us referring to regional, we do mean domestic within India. This is between the metros and the regions, as opposed to regional in sort of the ASEAN sense of the word, just to clarify. I've had a few questions, not surprisingly, which is great to see people participating. One of the Some of them refer to the international liberalisation, and I'll try and group them, but essentially they boil down to a couple of things. The first one is a question about, does the 020 go far enough in terms of making it easier for airlines to expand, and how quickly will that lead to a ramp up in international services, particularly when it's coupled with the distance restriction and the 5,000 kilometer ring fence, which is not covered by the open skies policy. I suspect, Amitabh, you might want to start on this, or Sidharath, you might also have a view thereafter.
Sure. I think the best would have been to replace the erstwhile 520 rule by simply, getting rid of it in its entirety. But
what do you think was the reason for not getting rid of it? To an international audience, it might seem sort of somewhat counterintuitive. What do you think was the reason behind it?
I think it had been on the book for such a long while that I think interests kind of start building around that, and there was this huge debate between the existing incumbent airlines which have been operating and had actually gone through the rigor of having served and committed 5 years of their since the startup to just plain domestic flying, and then being able to win the ability to fly international. So there was this debate that airlines who've been around for a while saying, we went through the same thing, so you can't make rules any less liberal or more liberal for the new players. And there was the entry of two new strong players in India. So I think it was the incumbents pitted against the newcomers, which was playing out. So to balance out, I think all interests, what came out really was the 020 criteria in its place.
Great. So it was a compromise, effectively. Just linked to that, again, a clarification question. For the open skies policy, the 5,000 kilometers, presumably then, looking at a map I'm sure all of us have, will not impact any services to or from the Middle East, which is where a lot of the volume growth has come from, nor will it impact the Middle East airlines. Is that correct?
It is, yeah. So it's the Middle East would certainly fall within the 5,000 kilometer range from New Delhi, and that is not addressed. So which means that at least in this round of liberalizing our air service agreements to make them open sky agreements, it would not cover the region which is lying within the 5,000 kilometers. And they would have to go through the standard route of either air service agreement negotiations happening, but that will happen automatically in case the India side of the route end has already achieved or used up 80% of its bilateral entitlements. In case the Indian-based carriers, designated carriers, are short of 80%, then in that case, if there is still a need expressed by the other party, by the other state for bilateral renegotiations, then that would have to be addressed by this new committee chaired by the Cabinet Secretary in India. That's the thing that I had explained earlier.
Yes, and I think that is both complex and I think quite important and interesting. So this 80% participation is effectively a threshold above which the open skies would come into effect. Is that correct?
Yeah. So open skies only for beyond 5,000 kilometers?
Yes,
or
absolutely. Yeah, got it. Okay, great. I am getting told that we are very near the end. Let me just see if there are any very quick questions that we could handle. Otherwise, we will, as we have on other webinars, provide a write-up of the answers of the unanswered questions. Yeah, I think I think we're pretty much there. So we will leave the questions there. Thank you so much for those of you who have submitted the questions, and Amitabh and Sidharath for your considered and thoughtful answers. I will hand over to Heidi to wrap up, and we'll speak again. Thank you.
Okay, thanks very much, Kata. That's all we have time for, I'm afraid. Thanks to Kata, to Amitabh, and to Sidharath. We're very excited about seeing all of you again at GAD Asia. 3 weeks today, 7th to the 9th of September in Delhi, where we're hosted by GMR Airports and Delhi International Airport Limited. If you've got any feedback on today's webinar or any recommendations for future webinars, please do complete our short survey at the end of the webinar. It should flash up on your screen shortly. Thanks very much. Goodbye.